In this video, we're going to look at how to structure your routine as a trader. So when I first started learning how to trade, one of the things I found the most difficult was that transition from amateur to professional, because when you start any other job, you've got a line manager or you've got someone to tell you, this is when you start, this is when you have lunch, this is when you have a meeting, this is where you check the roster if you don't know what's going on, this is the time you finish. But when you are trading, when you're a retail trader, you're trading from home and you're your own boss, really. So you have to figure that stuff out by yourself, unless you watch a video like this one. So in this video, I'm going to be focusing mainly on the US 30, as that's the market that I trade. But this video will actually work for anyone who trades any market. The only thing you want to be aware of is to adjust the session times if they're slightly different. So if you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well.
So similar to how you'd analyze different time frames when you're doing your trading analysis, when you are structuring your routine, you want to be looking at the different times. So you want to be looking at the month ahead, you want to be looking at weeks, you want to be looking at days, you want to be looking at hours as well. Let's start with a big one. Let's start with months. So when you are doing any other job, you will know usually at least a month in advance what the next month looks like. You'll know what days you're going to be working, if you're taking any holidays, if you're working weekends, what the hours look like. And you want to be thinking about those sorts of things at the start of the month for trading as well. That's because if you want to go from being an amateur to a professional, you kind of need to fit other things in around your work, which is often your priority. So you can't be making social plans on days when it's likely to be a really big move, and then trading at times when it's likely to be really chaotic because you're not going to be making a lot of money. So the first thing I do to figure out what my month ahead looks like is I go to the economical calendar on Thinkmarkets and I look for high impact news, and I make sure that I've selected for the United States because I trade the US 30, but if you trade any other currency, you'll want to make sure you select the right one as well. And what I'm looking for are the big ones. So I'm looking for CPI, NFP, and interest rates decisions. So what tends to happen is that the market will have a lot of volatility on those days the second the news is released. And the day itself can be quite hit or miss for trading opportunities. However, it's great for drawing on key levels. So often on big news days, you get some really good key levels. So I will always work, I will always show up, I will analyze the news that's been released. I will see if there are good opportunities, but be prepared for there not to be. And I will draw on the key levels based on the news data which is released. But what I also know is the days after the big news releases are likely to be very good, because the market has a lot more certainty and often the moves are a lot smoother. I also know that the 2 days before are likely to be very difficult because the market has less certainty and it's likely to be very choppy and difficult to get a good entry. So if I'm going to take any days off, I will look to take off the 2 days before a big news release. And if I'm definitely working any days, it'll be the day of and the 2 days after. Other important things you want to do is check for holidays. So especially if you're trading a currency of a country that you don't live in, for example, I live in the UK and I'm trading the US market. And therefore I will want to make sure that I check if there are any US holidays that I'd forgotten about or I wasn't aware of, because often the market will have a lot less volume on these days. The next thing you want to do is you want to just be aware of session times. When I first started learning how to trade, I was trading at completely random times. I was trading when I felt like it, when I was bored, when I wanted to place a trade, when I had breaks at work, after work, because I could. I was not being strategic at all. I was just placing trades when I felt like it, which is obviously a terrible idea. And I now know that you have to be very, very careful and very, very structured with it. So what you want to do is you want to know when the market that you trade typically makes its big move. So as I trade the US 30 in the UK, that's around 2:30 UK time in the afternoon. to around 4 o'clock. So there's about an hour and a half there. That's 9:30 Eastern time to around 11 o'clock Eastern time. So now I make sure that I set aside that time every day to focus on looking for an opportunity. I'm not looking for opportunities when the market isn't likely to present one. Sometimes the market will make a big move at random times, but because that's not typical, I am not counting on it every day. The other thing that you want to do is you want to add a bit of professionality to your trading, similar to how you would turn up on time to any other job, or you turn up early and you wouldn't turn up late. You want to do the same thing with trading. So I always turn up to trading half an hour before the session starts, and that gives me half an hour to do my prep, to do my analysis, to make sense of the markets, to look at the economical calendar, to analyze any data that's come out, and just to make sure that I'm really on board with what's going on before the market opens. That half an hour just gives you time to really be professional and to think through what you're going to be doing when the market is still quiet. Again, a stupid thing I used to do when I first started was I used to turn up 5 minutes late. And what that meant was that I didn't have time to do any analysis. It meant that I was rushing and I was making decisions that I hadn't thought through. I wasn't checking the economic calendar. I wasn't checking higher time frames. I wasn't doing all of the searches that I was supposed to be doing. I didn't have time to draw on my key levels for the day. And sometimes I'd even miss the move in that time. So always turn up early, exactly how you would with any other job that you were interested in keeping. Another thing that's really important is also staying late, similar to how you might stay late and analyze how you've done in any other job where you were interested in progressing. I always stay a little bit after, not to trade, but to analyze my trade. So the 3 questions that I always ask myself are, what did I do wrong? What did I do right? And were there any opportunities that I missed? Like, what could I do different next time? So I'm going to mock up a fake trade and I'm going to show you what that means. So let's just say, for example, I placed a trade here. I had a buy position. I used a 50-point stop loss and I did a 100-point take profit. Now, this trade won 100 points. There was a risk to reward ratio in my favor, and it didn't use any of the available drawdown space. So actually, it was a good trade. I won this trade, but it wasn't a perfect trade. I did some things wrong, I did some things right, and I could do better next time. So let's look at this a little bit better. If I'd got a better entry, say I'd entered down here, and that would have meant that my stop loss could have been a lot smaller. We could have had a 25-point stop loss, so half of what we had before, and we could have got a lot more profits out of this one. I could have got nearly 3 times more on that one. So that would then cause you to analyze, how could I have got in at this point rather than the point that I did get in? For example, maybe there was a key level down here that you missed, that there was actually a rejection candle off. That could have been a clue that the market was going to make a move up, and you could have got in with a much better risk to reward ratio. This one's almost 1 to 12. And then you could also analyze what happened up here. What could I have analyzed up here as my take profit? How would I have known that the market was slowing down? It could be something like, if you go on to Heikin-Ashi, and if you just check on a different time frame, we'll do 5-minute time frame. For example, you can see here that this candle shows a slowdown in momentum. You can see that the market starts to show a slowdown in momentum up here, whereas it was just bullish momentum all the way up. So you could have used that as a place to take profits, or a sign that the market was slowing down. So you want to just look at the different things that you could be doing better next time to help you improve. And that's all part of your routine as a trader, to make sure that you're constantly improving, is to give yourself that time at the end of the session just to go over those things.
So now you understand how to structure your routine as a trader. I've made a previous video on Thinkmarkets YouTube channel talking about the key times of day for trading the US 30. So if you like this video and want to go into it in a bit more detail, then watching that video next would be the next step. If you like this video, make sure to give it a little thumbs up. And if you want to see more content like it, make sure to subscribe to Thinkmarkets now as well.